If you've been paying attention to GPU mining over the past 6 months, then you may have noticed a trend with all the new mineable coins and the price action that follows once these mineable coins are released and they continue to be mined over a period of time. And unfortunately, this trend has been not great for GPU miners. So today I want to break down what is going on with the price action of all the new mineable coins, and why is there a very similar pattern between all of them? Why is this pattern that they all seem to just tank? Well, let's take a look. So I have a couple coins pulled up in CoinGecko right now with Karlsen, Nautilus, Nexell-AI, Pyrin, and Xelis. And a couple of these are very similar. So the Karlsen, Nautilus, and Nexell-AI are all Caspa forks, Pyrin as well, but it's a little bit different. So why do all of their charts over the last year basically look very similar? So these three are basically the exact same, and then Pyrin and Xelis are very similar as well, with a bit of a pump in the middle. Why do they all look similar like this? So I've had a couple questions in my Modern Mining Discord, which if you don't know about, if you want to become a channel member, you can get free access to the Discord where we discuss the crypto markets, how to begin mining as a beginner, and just share general crypto information. So if you're interested, check that out. But getting back into this, we were discussing why does it seem like all of these coins continue to tank, and the latest one being Xelis, unfortunately. Well, the answer is honestly quite simple. It's that these coins are extremely small, low market cap, ranked in the 1000s or 2000s and in all the total cryptos, so they're not nowhere near the top, and therefore they all suffer from a lack of exposure. Us being very GPU mining focused, we know about these coins, but your average Joe who doesn't mine crypto and doesn't pay attention to these tiny coins isn't going to know anything about these coins. They're going to be looking at maybe the top 500 cryptos and trying to figure out which ones in there are going to go up big. Whereas these cryptos are well outside that range, and therefore they suffer a lot from lack of exposure. And what that means is that being proof of work coins, where they're mineable coins for GPU mining, is that when profits are so low for GPU mining, a lot of miners will sell their coins that they mined, whether it's to buy other assets like Bitcoin or even to get US dollars from what they're mining to pay off their power bill. I don't personally do that. I don't sell coins to pay off my power bill because I want to accumulate as much crypto as possible, but some people do that. So what it boils down to is that there is a lot of sell pressure on proof of work coins, even Bitcoin, because miners need to sell their coins to get money to pay for their power bill. This is even compounded a little bit more for these other smaller cryptos because people like me who are not super confident in the long-term prospects of these coins, I'm going to sell them, but not even to pay for my power bill, to get other coins that I have more faith in, like Bitcoin or Caspa, or some of these slightly higher market cap coins that still have a lot of price potential. So what this ends up doing is having a lot of sell pressure on these very small market cap coins and not a lot of buying pressure because I mentioned before they don't have a lot of exposure. Us miners, we're not going to go buy 10,000 Karlsen because we might as well sit and mine it on the GPUs that we've already paid for. And the issue is that not a lot of other people are going to go out and buy a lot of Karlsen because it's so small and it's so new and not a lot of people know about it. So it boils down to proof of work coins have a very high constant sell pressure, and unless they can get crazy exposure, there's basically no buyers, and what that leads to is charts like we're looking at right here. So getting into this a little bit, you can see that all of these coins release at a decently high price, and as people mine them over time. And what this means is you're basically seeing an exponential curve down for all these coins because the price just continues to drop and drop the more people mine it, and until basically they're not profitable anymore. So Karlsen, Nautilus, and Nexell-AI are just gone for GPU mining profits. Part of that is because of FPGAs, but a lot of it is because the price is just no longer enough to be worth mining it in terms of how much money you're spending on power. Pyrin and Xelis are a little bit different, and this kind of brings up the struggles of current GPU mining, is deciding on which coins to hold and which coins to sell. There was a lot of hype around Pyrin, and that kind of would have panned out pretty well if you were holding this whole time in the beginning, because there was a very massive pump at one point. But as you can see, after that pump, as the sell pressure from mining continued, it just kept dropping, and it's continued to drop, and it is now less than what it was before the big pump. If you held through that big pump, you're probably kind of kicking yourself, because it's worth nothing compared to what it was before. And Xelis is a different example, because for a while it was holding up very well, and during that time period, crypto mining profits were actually pretty good for GPU miners. So it kind of released around the $20 mark in early May of this year, and even all the way up to June. So basically 2 months later, it was only at $15. So it only lost about 25% in a 2-month period, which has been pretty good compared to some of these other smaller GPU mineable coins that have just released in the past year to 6 months. But unfortunately now, that sell pressure is really starting to kick in, and it almost kind of feeds on itself, where the faster it starts to drop, more miners are selling their coins, and therefore leading to faster drops. Because now it's all the way down to about $8, which is about a 66% drop from where it released. But Xelis is similar to Pyrin, because if you held for the first month, you were rewarded with a very big price pump, basically a 2.5x, and that would have been a good time to sell those coins. What I was highlighting earlier is it's so hard to determine which coins to hold and which coins to sell, because if you were on the Nautilus or Nexell-AI train, they basically tanked the whole way, and you should have been selling the entire time you're mining. But if you were on the Pyrin or Xelis train, then you should have been holding for the first few months and then selling at these big peaks. That's why my strategy that I've always used is keep about half of the coins I'm mining and sell the other half for other cryptos. So I'm always trying to build up my Bitcoin bags, and I've been selling Xelis as I've been mining it. But I always keep at least 5 to 10 in the tank, so that if there is a big price peak like this, I have some to sell and capitalize on that increase. So when this peaked right here, I was able to sell like 5 to 10 coins, and that was pretty nice because it offset some of the lower profits from these other days. And at this point, I'm just keeping 5 in the bank, and I'm selling every payout I get, because unfortunately I see this getting worse before it gets better. And hopefully, once the entire crypto market turns around, a lot of these coins start to turn around as well. But the ones that are basically kind of dead, that likely may never happen. And I would consider like Nautilus and Nexell-AI probably dead at this point. Karlsen, maybe not, though it does look very similar. And Pyrin, who knows what's going to happen with Pyrin, because there's about to be a 30 million coin released to fund the development of the project. And personally, I think that's going to tank the price a lot. And that's why I voted against that hard fork. But unfortunately, it ended up passing. And I don't think it's going to do well for the price of Pyrin, at least short term. So that's the answer to the question. Basically, there's so much sell pressure on proof of work coins, especially small ones. And there's not enough buying pressure to offset that. And so what you're going to see is just gradual losses the whole time. So personally, I recommend always selling a little bit to fund other coins that you believe in a little bit more, and holding a little bit to capitalize if there is a price pump. If you're interested on kind of figuring out when to buy and sell these coins, check out this video where I break down why it's hard to sell at the peak, because it's not easy. I'll see you guys next time. Peace.